47 days. That is how long the crypto market has been trapped in extreme fear as of today. 47 consecutive days. The fear and greed index, the number that measures whether the market is confident or terrified, has been stuck below 20 for 47 straight days. Not one green day. Not one day of neutral sentiment. 47 days of extreme fear. Every single day. I want to put that number in context, because 47 days of extreme fear is not normal. It is historically rare. And what happens immediately after these extended extreme fear periods is something that the XRP community desperately needs to understand right now. Because the last time the market experienced a comparable period of sustained extreme fear, the recovery that followed was one of the most explosive price movements in XRP's history. I am going to show you that history today, step by step. I am going to show you exactly what 47 days of extreme fear means for what comes next. I am going to show you what the institutional investors are doing right now while you are watching XRP at $1.29 and feeling afraid. And I am going to give you the 3 specific dates in the next 23 days that will determine whether the 47-day fear cycle ends in a crash or in the most powerful XRP rally of 2026. Stay with me. This is the most important context video I have made on this channel. Step 1. What 47 consecutive days of extreme fear actually means and why it is so historically significant. The Fear and Greed Index was created to measure market sentiment. It looks at volatility, market momentum, trading volume, social media discussions, and surveys of market participants. It produces a number between 0 and 100. 0 is maximum fear. 100 is maximum greed. 20 or below is classified as extreme fear. In normal market conditions, the Fear and Greed Index moves around. Good news comes out. It goes up. Bad news comes out. It goes down. It does not stay in one zone for weeks at a time. But right now, it has been stuck in extreme fear for 47 consecutive days. Let me show you what this specific pattern has meant historically. In March 2020, the market entered extreme fear as COVID shut down the global economy. Bitcoin crashed below $4,000. XRP fell to its then all-time low. The fear was genuine and extreme. And extreme fear lasted for approximately 30 days. After that fear ended, XRP entered its recovery cycle that eventually took it from approximately 17 cents to $1.95 within 18 months. In June through July 2022, the market entered another extended extreme fear period after the Luna collapse and Three Arrows Capital bankruptcy. This fear lasted approximately 60 days. During those 60 days, institutions were quietly accumulating. After the fear ended, XRP began its path toward the November 2024 rally that eventually took it from 50 cents to $3.65. A 730% move. The pattern is consistent across XRP's history. Extended periods of extreme fear are not the beginning of a permanent decline. They are the accumulation phase. The period where retail investors are selling to institutional buyers who have the patience and the capital to wait for recovery. Today marks day 47 of this extreme fear cycle. Based on historical precedent, the accumulation is happening, and the recovery window is approaching. Step 2. What institutional investors are doing right now that retail holders cannot see. Here's the data that should shock every XRP holder watching this video today. 25% of fund managers surveyed plan to add XRP to their portfolios in 2026. 25%. Not just fund managers considering it. Fund managers with a plan, with a timeline, with allocation intent. This is the highest XRP allocation intent of any asset outside Bitcoin and Ethereum in any institutional survey conducted in 2026. Let me make that completely clear. The most sophisticated money managers in the world, the people who manage billions of dollars on behalf of pension funds and endowments and wealthy individuals, are planning to buy XRP, while the Fear and Greed Index is at 12. while XRP is at $1.29. While 60% of retail holders are underwater and afraid, the institutions are planning to buy. And here is the supply data that makes their buying even more powerful than it would normally be. XRP's net exchange supply has dropped 16.28% since February 2025. The amount of XRP available to be sold on exchanges has been steadily shrinking for 14 months, even as the price kept falling. The sellers are running out of XRP to sell, and 25% of the world's fund managers are preparing to buy what little is left on the open market. When institutional buyers who have been waiting step into a market where supply is at historic lows, the price impact is not linear. It is exponential, because there simply is not enough XRP on exchanges to absorb large-scale institutional buying without moving the price dramatically upward. The institutions can see this. That is why they are planning to buy. That is why the 47 days of fear have not shaken them out. Extreme fear for retail investors is an accumulation opportunity for institutional investors, and the data proves they are taking it. Step 3. Liberation Day tariffs just made the fear worse. And here's why that is actually bullish for XRP. I need to address the macro situation directly because it is driving the fear today. Liberation Day tariffs took effect on April 6th. These are sweeping new U.S. tariffs on major trading partners that have triggered another wave of market anxiety. Oil prices are above $105 per barrel on Strait of Hormuz tensions from the U.S.-Iran conflict. The Nasdaq has shed another 3%. Bitcoin is hovering at $67,000 with fragile options market structure underneath it. The market is scared. The tariffs made it more scared. The fear index is at 12. But here's the counterintuitive truth that your XRP investment depends on understanding. Every tariff announcement, every inflation fear, every geopolitical escalation, these events are temporary. They create fear in the short term. They resolve in the medium term, and every single time they resolve in XRP's favor, the price has moved dramatically upward. When Trump walked back Mexico tariffs in early 2025, XRP surged within hours. When the Fed signaled rate flexibility in March 2026, XRP jumped. When the Iran conflict showed signs of potential de-escalation, XRP moved. The pattern is clear. Fear comes from macro events. Recovery happens when macro events resolve, and macro events always resolve. Eventually, the Liberation Day tariffs are today's fear. They will not be today's story in 3 months. They will be a data point in the history of why XRP was accumulating at $1.29 in April 2026. Furthermore, tariffs that make international trade more expensive create a specific tailwind for XRP's use case. Companies paying more for goods need to reduce costs everywhere else. Cross-border payment fees are one of those costs. Ripple's on-demand liquidity, when fully activated by the Clarity Act, reduces cross-border payment costs dramatically. Tariff-driven trade friction increases demand for efficient payment solutions. XRP is that solution. The same event that is causing today's fear is building tomorrow's demand. That is the complete picture. Step 4. The 3 dates in the next 23 days that end the 47-day fear cycle. Let me give you the specific timeline that the XRP community needs to be watching, because the 47-day fear cycle does not end randomly. It ends because of specific events, and 3 of those events are happening in the next 23 days. Date 1, April 8th, 2 days from today. The SEC submits its proposed penalty for Ripple's final settlement. This number will tell the market exactly what Ripple's financial liability from the 5-year legal battle looks like. A modest penalty means Ripple has full financial freedom to execute its ODL expansion strategy. A large penalty means constraints on that expansion. The market will price in the implications within hours of the brief being released. This is the first potential fear-ending catalyst. Date 2, April 13th. 7 days from today, the U.S. Senate returns from recess. The Clarity Act can formally advance. The Senate Banking Committee has been targeting late April for its markup of the bill, April 13th is the day the clock starts ticking on that markup being scheduled. Any announcement of a markup hearing date on or after April 13th would be a massive positive catalyst. Victor Olanrawaju at CCN said directly that April 13th committee clearance would preserve the bill's relevance for the current market cycle and could prompt institutional investors to begin positioning ahead of potential demand. Date 3, April 16th. 10 days from today, the SEC holds a formal Clarity Act roundtable. This is a regulatory discussion session that precedes formal guidance. Roundtables are how the SEC signals what it is going to do before it does it. The April 16th roundtable on the Clarity Act means the regulatory apparatus is actively preparing to implement the bill's framework. This roundtable is not a news headline that most XRP holders are tracking, but it is one of the most concrete signals that the Clarity Act's implementation timeline has been formally set in motion. 3 dates, April 8th, April 13th, April 16th. If any one of these produces a positive outcome, the 47-day fear cycle has a specific catalyst to end on. If all three produce positive outcomes, the institutional buyers who have been preparing for weeks activate simultaneously. And they activate into a market where exchange supply is at its lowest level in over a year. Step 5. What historically happens to XRP in the 30 days after extreme fear ends? Let me show you the specific data on what XRP has done in the 30 days following the end of extended extreme fear periods. After the COVID fear ended in April 2020, XRP gained approximately 45% in the following 30 days as the broader crypto market began its recovery cycle. After the June-July 2022 extreme fear ended, XRP gained approximately 38% in the following 30 days before entering a consolidation period that eventually led to the 2024 rally. After the February 2026 extreme fear period that took XRP to $1.11, XRP recovered 38% in the following 3 weeks. CoinDesk documented this specific recovery, noting that XRP's recovery outpaced both Bitcoin and Ethereum as investors bought the dip. The historical average XRP recovery in the 30 days following extended extreme fear is between 35 and 45%. From today's price of $1.29, a 35% recovery would take XRP to approximately $1.74. A 45% recovery would take it to $1.87. These are not price predictions. These are historical ranges based on documented XRP price behavior following previous extreme fear cycles. The future may differ. The macro environment may remain hostile. The catalysts may disappoint. But understanding the historical base rate of recovery from extreme fear gives you the context to evaluate what 47 days of fear actually means for your position. Step 6. The complete honest picture and what to do with it. Here is my complete honest assessment. 47 days of extreme fear is historically unusual. It has always eventually ended. And the endings of extended extreme fear periods in XRP have consistently been followed by significant price recoveries. The institutional data confirms that sophisticated money is positioning for that recovery. 25% of fund managers plan XRP allocation. Whale accumulation is at multi-month highs. Exchange supply is near historic lows. The buyers are waiting. The sellers are running out of XRP to sell. The specific catalysts for the fear to end are on a documented timeline. April 8th, April 13th, April 16th. These are not vague hopes. These are scheduled government and regulatory events that have specific implications for XRP's most important pending catalysts. And the tariffs that are adding fear today are the same economic pressure that builds long-term demand for efficient cross-border payment solutions like XRP's on-demand liquidity. My honest advice, the worst financial decisions in XRP's history have been made during periods of extreme fear. Selling at $1.11 in February 2026, selling at 28 cents in July 2022, selling at 17 cents in March 2020. Every one of those selling decisions looked correct in the moment. Every one of them was wrong on a 6 to 12-month time frame. The 47-day extreme fear cycle is doing what extreme fear always does. It is testing conviction. The investors with conviction keep their positions and wait for the catalysts. The investors without conviction sell into the fear and miss the recovery. Which investor you are is a decision only you can make. But you now have the complete picture to make it informed. Now I want to hear from you. Did you know the market has been in extreme fear for 47 consecutive days? Type new if you were already tracking this. Type shocked if this number was completely new information for you. And type buying if the historical pattern of recovery following extended extreme fear has made you consider adding to your XRP position at current prices. Drop your answer right now in the comments. I reply to every single comment in the first hour this video is live. Subscribe immediately and turn on the notification bell. April 8th is 2 days away. The SEC remedies brief drops that day. I am posting a dedicated video within hours. April 13th and April 16th follow immediately after. 3 critical events in 10 days. Subscribe now so you do not miss a single one. Thank you for watching. I will see you on April 8th, and I will see you in the next one.